Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine investors wait in bated breath as the Bangko Sentral decides on policy this week. But before that, Philippine exports heading to the U.S. will be slapped a 17% levy from April 9th. We speak with Jonathan Ko of Standard Chartered in Singapore. And as the Securities and Exchange Commission mandates sustainability reporting by next year, Benjamin So of ESGpedia lends guidance on how corporates should prepare. Top official of President Donald Trump says over 50 countries are falling in line to begin trade talks with the U.S. This comes days after the tariff announcement unleashed retribution among severely affected nations and sent global equities into a sell-off. Amid the fallout over his tariff plans, Trump is urging Americans to, quote, hang tough. National Economic Council Director Kevin Hassett on Sunday assuaged concerns the duties would lead to a spike in the cost of goods.
The fact is the countries are angry and retaliating. And, by the way, coming to the table, I got a report from the USTR last night that more than 50 countries have reached out to the president to begin a negotiation. But they're doing that because they understand that they bear a lot of the tariff. And so I don't think that you're going to see a big effect on the consumer in the U.S. because I do think that the reason why we have a persistent long-run trade deficit is these people have very inelastic supply.
Thousands took to the streets over the weekend, expressing anger over Trump's tariff order and his other domestic policies. From Washington, D.C. and Vancouver to London and Berlin, protesters oppose reciprocal tariffs that Trump imposed on countries with high trade deficits with the U.S. In retaliation to the levies, the European Union will impose $28 billion in tariffs on U.S. products, including meat, cereals, wine, chewing gum, dental floss, and toilet paper. The EU Commission will also vote on the two-stage counter tariffs it announced last month. Meanwhile, China has announced a number of countermeasures. Beijing will impose a 34% across-the-board tariff on U.S. imports, place 11 American companies under the undesirable entities list, halt chicken imports on 5 U.S. agricultural companies, and investigate chemicals firm DuPont for possible anti-monopoly violations. China is facing a total of 54% duty on products coming to the U.S. Over in South Korea, the political turmoil is being overshadowed by Trump's tariffs. Seoul got a 25% reciprocal tariff on Thursday and ousted impeached President Yoon Suk-yeol on Friday. Analysts say with the election set within 60 days, candidates are expected to uphold South Korea's alliance with the U.S. The winner, however, needs more concrete steps to placate Trump and find alternative trade partners. As for Taiwan, it has no plans to counter its 32% duty. Instead, President Lai Ching-te pledges to remove trade barriers and increase investments of Taiwanese companies in the U.S. Lai seeks to quell confrontation with Trump as Taiwan's economy is dependent on trade. Philippine exports to the U.S. will be slapped with a 17% tariff starting on Wednesday or April 9th as part of President Trump's sweeping tariff policy. The 17% tariff, still lower than the 34% to be levied on goods coming to the Philippines from the U.S. The government was quick to allay concerns. Finance Secretary Ralph Recto says the Philippine economy, mainly driven by domestic demand, is relatively resilient against trade wars. Trade Secretary Cristina Roque said reciprocal tariffs will provide strategic opportunities for the Philippines. The Philippine Special Assistant to the President for Investment and Economic Affairs, Frederick Go, last Friday told this program it is time to let foreign investors know that the Philippines is open for business.
We took a basket of 12 countries, and the Philippines comes out number 11 out of 12. So I think it's really an opportunity for the Philippines to attract investments from all these countries that have been imposed with higher tariffs. We took a look at all our Southeast Asian neighbors, except for Singapore. We have an opportunity to capitalize on this.
A day after the 17% tariff comes into effect, the Bangko Sentral will hold its policy meeting and decide on whether to remain on pause or to resume cutting rates. All 17 surveyed in the Business World poll predict a 25 basis point cut from the Bangko Sentral on April 10th. The Business World survey was conducted right after President Trump's April 2 announcement on tariffs. March inflation last April 4th came in slower than forecast at 1.8%. The result is near the lower range of the Bangko Sentral's target range and also lower than the median forecast in a Business World survey. When asked for his reaction, Bangko Sentral Governor Eli Remolona last Friday responded by saying, quote, "It's great news. It gives us more degrees of freedom." The Bangko Sentral decides this Thursday. The Philippine Economic Zone Authority is pushing for reduced U.S. tariffs on key exports from local eco-zones. This comes as the Trump-imposed 17% reciprocal tariff set to take effect on April 9th. PEZA Director General Tereso Panga says they aim to reduce tariffs on electronics, automotive parts, and select farm products under a bilateral free trade agreement framework. He also said the U.S. should consider lower rates, especially since many American companies rely on Philippine-made electronics. Electronic products account for 44.5% of export sales to the U.S. The PEZA chief also says the government is open to lowering Philippine tariffs on critical U.S. imports as a sign of goodwill. Meanwhile, PEZA warns that the IT BPM sector could face indirect effects even if it is not covered by U.S. tariffs. And the PSEI opens this Monday lower by about 3%. We're back to the 5,900 level, as you can see there in the first 7 minutes of trading. Let's take a look at the Philippine peso. It opens weaker against the dollar at 57.10. The peso closed Friday at 56.821 to the dollar, the strongest since October 2024. Now, a dip in global inflation and global tensions are moving markets across the bond universe. Yields in government securities fell last week amid cooling Philippine inflation and heightened U.S. trade uncertainty. The Philippines' GS yields dropped by an average of over 2.5 basis points week on week. The midterm tenors led the decline, with the 5- and 7-year bonds falling over 6 and 8 basis points, respectively. Now for more, live from Singapore, Jonathan Ko, the Standard Chartered Bank economist and FX analyst. So good to see you again, Jonathan. Welcome back to the program.
Nice to see you again, Cathy.
Yeah, you know, the last time we talked on March 7th, you were here in Manila and just about to fly out. And in your meetings with the Philippine-based clients then, you said you caught a sense of cautious optimism. Does this still hold true nearly 1 month on following Trump's April 2 tariffs?
Sure. So I think for Philippines generally, it still holds true. Generally, because in terms of the tariffs being implemented, I think as noted, within ASEAN, Philippines actually has one of the lowest, excluding Singapore. Secondly, Philippines is a lot more domestically driven. 78% of the economy is actually domestically driven. So it's a little bit more insulated from that perspective.
Well, let's take stock of where the Philippines now stands vis-a-vis the Asia-Pacific region. We've got Singapore and Australia at the bottom rung, the lowest impacted. And the Philippines comes in second lowest at 17%. What do the maths reveal when you compute both the direct and the indirect tariffs that would result covering all of the Philippine exports to the U.S.?
Sure. So how we analyze it is basically by looking at the value add that Philippines contributes to exports to the US. And when we say direct, it's basically Philippines direct exports to the US. And when it's indirect, it's basically the rest of the world exports to the US. And in terms of that, when we look at the total impact, it's about 0.2 to 0.3 percentage points of GDP for the 17% tariffs being imposed on the Philippines.
Right. You say in your note here, the Philippines is being negatively less affected rather than necessarily benefiting much. So what's going to keep the Philippines from benefiting much from its more heavily taxed neighbors?
Sure. So I think it's really, I guess domestically, one is over the next few quarters or so, the Philippines needs to be able to attract FDI. And I think at a moment when uncertainty is actually very high in the world and in the region, I think a lot of businesses will be a lot more cautious in terms of investment decisions. So even though the Philippines is facing lower tariff rates, at the end of the day, because of this huge uncertainty, businesses will still be very cautious. So in terms of the benefit really coming to the Philippines, I think we probably need to wait and see.
So post-April and slower March inflation, you've moved up your timing for the next rate cut. You're seeing 25 basis point of a cut this Thursday on April 10th. So what are the nuances in your changed expectations?
Sure. Thanks, Cathy. So for me, the cut is not really about the inflation print coming in much lower. Based on growth and inflation fundamentals, I have always believed that the Philippines or the BSP needs to further ease monetary policy. What really stopped them in February was not so much growth or inflation, but more on external policy uncertainty. Now, and leading up into this Thursday's meeting, I was thinking that because of the uncertainty over tariffs, we could actually see a stronger dollar. But what happened was that we actually got a much weaker dollar. And if I were to look at the factors going forward, I mean, you have this US growth shock weighing on the dollar. People are talking about the de-dollarization theme. Over the next couple of weeks or so, we are going to get positive seasonality in terms of remittances supporting the peso. And you also have oil prices now heading much lower. I think Brent is trading at around 63. So in terms of concerns over imported inflation and this anchoring of inflation expectations, I think that will actually be contained, and that will basically allow the BSP to actually cut this week. But I would say the risk because of the uncertain environment, external policy uncertainty, would be for the BSP to actually pause.
So what's your revised forecast then for dollar peso, and what do you think is going to drive that? Because the peso right now stands at its strongest in 6 months.
Sure. So in terms of dollar peso, I mean, our view is that we think that there's potentially some upside risk for the dollar. At the moment, really, it's the US growth shock. But at the end of the day, if let's say we are going to get a stagflationary environment in the US, if inflation is going to be much higher because of tariffs, then potentially the Fed may not be able to cut as much as what markets are pricing in. So markets are already pricing in 125 basis points of cuts this year. If the Fed is actually not able to deliver that, what we could actually get is potentially a reversal in terms of the dollar higher. So in terms of Q2, our current forecast at the moment is 58.60 at the end of Q2.
Got that. Well, thank you so much for the update, Jonathan. Much appreciated. Jonathan Ko of StanChart joining us in Singapore. And you're watching Money Talks. Coming right up, Meralco activates a new substation in Santa Rosa, Laguna. And Globe Telecom expecting its prepaid services to be a major driver of revenue growth this year. Keep it here on One News. back to Money Talks. I'm Cathy Yang. The national government's gross borrowings fell sharply by nearly 49% in February as domestic issuances declined. Data from the Treasury Department show total gross borrowings declined to over 339 billion pesos, almost half of last year's level. However, month-on-month, gross borrowing rose by nearly 60% despite a 79% drop in domestic debt. Oeconomia Advisory and Research economist Reniel Erese says this reflects better fiscal space, showing that the government, quote, did not need to borrow as much. Meanwhile, the monthly increase was due to the issuance of global bonds. Meralco has powered up its new substation in Santa Rosa, Laguna to meet rising electricity demand in the area. The Mesaland substation is located in Hacienda Santa Elena and aims to improve power quality in parts of Laguna and Cavite. It features a new power transformer and supports 4 distribution feeders for better reliability. Meralco says it ensures backup power through 2 sub-transmission lines, providing N1 contingency. Communities, hospitals, schools, and businesses in Santa Rosa and nearby areas are expected to benefit. The move is part of Meralco's broader push to boost its network and support economic growth. Globe Telecom expects prepaid services to drive revenue growth this year as it launches its next-gen 5G router. The Alalaya-led telecommunications company recently launched Globe at-Home 5G Wi-Fi to boost its home internet line. Globe Chief Commercial Officer Darius Delgado says they now see prepaid and postpaid as flexible payment options for all users. Globe has teamed up with tech firm RainX to roll out advanced routers for better network performance. With more Filipinos relying on digital services, Globe is seeing a rise in prepaid users. In 2024, it posted a 14% increase in core net income to over 21 billion pesos. For more on these stories, check out Business World online. Global markets tumbled last Friday as the fallout over Trump's tariffs continue. U.S. markets are raised to $6.6 trillion in market value last Thursday and Friday. The Dow shed 2,200 points at the close of Friday's session, entering correction territory after declining by 10% from its December 2024 high. The S&P 500 fell by nearly 6%, bringing its losses for the week to 9%. The Nasdaq also slid by nearly 6%, falling into a bear market, the second U.S. index to reach that territory after the Russell 2000, which tracks small businesses. European markets also dropped sharply last Friday. The regional stock 600 down by over 5%. Both London's FTSE 100 and Germany's DAX declined by 4.95%. And France's CAC 40 declined by 4.25%. The Nikkei 225 leading losses among Asian markets. Japan's index now down by 2.4%. Australia's ASX 200 falling by 2.5%. The ASX already enters into a bear market territory after sliding by 11% since its February peak. South Korea's Kospi declined by 0.8%, and Hong Kong's Hang Seng slid by 1.5%, along with China's CSI 300 shedding 0.5%. Here in the Philippines, the PSEI closed Friday's session down by 1%. The local index is now hovering at 17-month lows. The futures point to a further decline when the markets open later tonight, Manila time. The Dow shedding 1,300 points, S&P down by nearly 4%, and the Nasdaq falling by nearly 5%. Trump said Sunday evening he has no intention to tank the markets, but, quote, sometimes you have to take medicine to fix something. And Asian markets are extending their sell-off this Monday. The ASX 200 opens over 1% lower in early trading, plunging by 6% to the 7,100 mark. Kospi tumbles by over 4%, and the Nikkei 225 falls by 8%. PSEI sustained its declines following Trump's tariff announcement. 2 stocks stood out: Cebu Pacific and Ayala Corp's IMI. IMI could possibly be one of the few that may benefit, says Ron Acoba of Trading Edge. While semiconductors are exempted from tariffs, at least for now, from a technical standpoint, IMI is positioned to clear its resistance at 2 pesos per share. A move past 2 pesos may then lift it to its next resistance at 240 per share. On the other hand, Cebu Pacific is seen to rise following the 7% slide in crude last Friday. Aviation fuel expenses account for about 32% of its revenues, so a 7% slide in fuel prices would translate to a notable increase to its bottom line, says Acoba. Technically, the stock is poised to move out of this short-run bullish flag pattern, one that can easily propel it towards its pivot handle at 36 pesos per share. Tariffs aside, President Trump had earlier scrapped diversity, equity, and inclusion programs in the U.S., a development that has had a chilling effect on environmental, social, and governance, or ESG, initiatives. In the Philippines, the Securities and Exchange Commission recently mandated the sustainability reporting by 2026, ensuring compliance with the International Sustainability Standards Bureau. With us now for more is the founder and managing director of ESGpedia, Asia's leading ESG data and technology platform, empowering corporates, SMEs, and the financial sector to attain ESG goals. Joining us live from Singapore, Benjamin So. So good to see you, Benjamin. Welcome to the program.
Good morning, Cathy.
All right, so first let's tackle the big policy picture here, as the one area to which Trump has been consistently hostile towards is ESG. So how is Trump's anti-ESG stance in the U.S. impacting conversations overlapping sustainability, technology, and strategic ESG in Asia?
Well, I think firstly, if we are looking at ESG, it's important to have a longer term perspective, because the objective of ESG is to have a sustainable planet, a sustainable future, and a part of it, of course, is a sustainable society and businesses. So I think it's important that we have a time frame of, literally a few decades down the road. And yes, there might be policy changes along the journey, but I think it's also, we should be minded to, remember that whatever actions that we are taking today can really influence, the future of the planet down the road. So I believe that the good news is, while many companies in America are now following the, updated policies that are laid out by the president, externally outside America, it's still a very interconnected global economy whereby companies are still following regulations in the various jurisdictions outside of America that already have mandatory requirements on ESG.
So I guess that means prepare. That's the advice for the corporates, because here in the Philippines, the SEC had already placed publicly listed firms on the clock on sustainability reporting. So to those that have yet to do so, what should companies do in the Philippines, big and small, to prepare for 2026?
Absolutely, you're right in the sense that the SEC actually mandated sustainability reporting from 2026 for the listed companies. So they will follow a very standard format, whereby it is according to an international standard. It's rather prescriptive. There are already certain guidelines and tools made available by the SEC. Besides that, their suppliers or the supply chain would be the smaller companies that sell to them, for example. They would also be requested, by the larger companies to provide certain data to fulfill the sustainability reporting requirements of the listed companies. So in other words, all of them need to start preparing. There are certain set of standards and tools out there in the market. We are also providing some of these that will enable companies, both large and small, to be able to keep up with these regulations.
It brings us to greenwashing, because with the increased disclosure, there's going to be a higher risk of greenwashing. So how can business and regulators manage that risk? Or when a company makes an environmental claim about something that it's doing that is intended to promote a sense of impact, but that at best is misleading or at worst does not exist?
So I think that's where the clearer regulations actually do help. Right now there is this certain template or format that therefore companies need to be able to disclose, and that's where there will no longer be claims of ignorance, right? For example, if I reported something in a certain way that's not quite the truth, okay, there's no longer a cause to say that, oh, there wasn't very clear guidelines of how I should report. So with the clearer regulations, okay, these standards will become more or less pre-programmed, okay, whereby companies can be easily able to meet the requirements, and therefore, with the use of these regulations and technology, greenwashing can be avoided just by simply recognizing the outliers and differences.
Well, we got 8 months to prepare for those corporates who still have to do some sustainability reporting. Thank you so much for joining us, Benjamin So of
Thank you.
ESGpedia in Singapore. And coming up after the break, Pope Francis makes his first public appearance since he returned to the Vatican. Stay with us. Money Talks on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. President Donald Trump firmly rejects quotas in favor of what he calls a merit-based system. But while there's a risk of creating a culture of entitlement, quotas could be a powerful driving force. That is according to attorney Yuni Perez Mata of Next Gen Organization of Women Corporate Directors.
We call these quotas. When you require a certain number of percentage of women into boards, that's still, it's, some people think that it's too much, then you should be qualified in the first place. So that is still, there's an ongoing debate on whether quotas are really good. No. But what we have seen is that in countries which adopted quotas, the movement to have more women in the boards really spurred forward.
But if you ask President Trump, he'll say, no quotas, would rather do merit-based because he's already promoted merit, excellence, and intelligence in the workplace and the Middle
Because
East.
I think merit is a given. Qualification is also a given, meaning you shouldn't be in a board just because you are a woman. You should be in a board because of your qualification and merit. So I think the danger probably is that it becomes an entitlement. I think that because of the quota, then it becomes an entitlement to people, and then people think they're entitled to it or to the position, even if they're not qualified. That's the danger.
So what does someone have to do then to get to be board worthy in this day and age when there's a lot of awareness that women should be represented more in boards?
Well, number one, you have to be good at what you're doing, okay? Because that is what you will bring to the table, to the board.
In any kind of industry?
In any kind of industry, whether you're into marketing, whatever, you have to have your own expertise, okay? Develop that early on. And then, of course, you need the icing on the cake. You need to know what are the real functions and duties of a director, what is corporate governance, these things may not come into your day-to-day work. So it's really awareness, being good at yourself, and then looking out there for opportunities, trainings, and of course, networking.
Great nuggets of advice there. Attorney Yuni Perez Mata of Next Gen Organization of Women Corporate Directors. Catch the full interview now, available on One News YouTube channel and Spotify page. Pope Francis made a surprise appearance at the Vatican on Sunday, just 2 weeks after being hospitalized for double pneumonia. The 88-year-old pontiff was rolled out in a wheelchair to St. Peter's Square during a Jubilee Mass for the sick and health workers. He greeted everyone in the area with a voice that sounded much stronger compared to his release on March 23rd.
Buona domenica a tutti. Grazie tante.
He's now completed 2 weeks of a doctor-ordered 2-month rest while undergoing physical, respiratory, and speech therapy and treatment for a persistent lung infection. Prayers do work. That is it for Money Talks. I am Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.